Okay, everybody, it's me, Gregory Mannarino. It is Sunday, March 13th, 2022, people. This is it. This week is huge. Why? We got this highly anticipated announcement from the Federal Reserve with regard to monetary policy. We'll talk about that in just a moment here. There's a lot of moving pieces over the weekend here. What's been going on? Honestly, you all know this. This Russia-Ukraine issue is injecting a tremendous amount of uncertainty into the market. Although, on the opposite side of that, the market does realize that trillions of dollars are going to be created out of thin air. And that is obviously very positive for the market. But in the short run here, absolutely, lots of volatility. We've seen some crazy swings in the market. And now with this attack here, apparently we got this Iranian missile attack which hit Iraq. That has the potential to drive crude oil higher this week. It's going higher anyway. But again, whenever something goes on over there, the knee-jerk reaction is always higher crude oil. And we'll see how that plays out too. So, going back to the big announcement this week, I still stand by my call that the Fed is going to raise rates this week. And I think it's going to be fractional. 25 basis points would be my best guess. Could they go 50? Yes, but I don't think so. I think they're going to go 25. Because again, look, the scheme is very simple. Inflate, inflate, and then inflate some more. That's their goal, to continue to inflate. I know the propaganda ministries are all, trying to push the fake narrative of, inflation is out of control. We're going to do something about it. Nothing could be further from the truth. And I mean nothing. They don't care. The Fed is deliberately inflating and creating inflation. This is, again, a global phenomenon. Central banks around the world, and they're using this Russia-Ukraine war as an excuse. This has been going on way before that. Way before that. It's gotten worse since this entire thing, and we need to talk a little more about that too. But, look, the phenomenon of inflation, or how should I put this? The groundwork for surging inflation has been set in motion years ago. The current president obviously has been, calling on the Fed to continue to inflate. President Trump, same thing. Inflate, inflate, inflate some more. Obama, same thing. I mean, that's all they've been concerned about. These last three presidents, none more so in the history of the United States, has called on the central bank to continue to inflate on an epic scale. These three last presidents have been, the best friends to the Federal Reserve in the history of the United States and history of central banking. There's never been three presidents that have done more harm to the global debt bubble being fueled by central banks, none more so than the Fed, and to the United States of America. That's really the truth. And it's not going to stop. This is a scheme. You all know that. Presidents don't matter. They're all puppets, dictators, all of them. It's central banks running the entire show, period, the freaking end. All right, now with that said, let's move forward here. I got some interesting economic news I want to share with you. So Goldman Sachs is saying this, that I'm laughing. I shouldn't be laughing, but I am. Goldman Sachs is saying, yes, indeed, the U.S. economy is slowing down, and they're lowering their forecast for the S&P 500 moving forward. Now, you know my take on this. Yes, we all know, and this is no secret to anybody, that the U.S. economy, the global economy, is not just slowing. We're in free fall with surging inflation, and people are hurting on a massive scale, continuing to borrow beyond their eyeballs just to maintain some kind of an illusion of a middle-class existence. And it's a terrible thing to see. Okay, we got all that. But with regard to, when I hear a major bank come out and say, okay, we're downgrading the forecast on the markets, it's going to underperform or whatever, I don't know. I just kind of got to take the opposite side of that trade. I really do. Here's the situation, people. Look, wars notwithstanding, anything notwithstanding, we're seeing global debt surge faster than it has ever surged in history. The war is nothing more than a scheme to pull cash from the future. No other endeavor on this earth generates more cash than war, the propagation of war. And we haven't seen anything yet with regards to they're gonna prolong this like you cannot believe. There's no end in sight, and that means there's no end to the amount of cash that's going to be pulled from the future. That alone is massively stock market positive. The fact that pulling all this cash from the future is going to dilute the dollar and every other fiat currency, and we're going to see a lot more inflation, is also massively stock market positive. The fact that the Federal Reserve is going to infinitesimally, I'm probably saying the word wrong, fractionally, okay, raise rates here, I mean, it's just an assurance to us and the market that the Fed has no intention whatsoever to do anything about surging inflation. Again, look, the lie has been shoved down people's throats like you can't believe. Oh yeah, we're going to raise rates. We're going to raise rates, and that's really going to do something about inflation. No, it's a lie. It's not going to do a damn thing. In order to fix that, the Federal Reserve would have to stop buying assets, and they are continuing to buy mortgage-backed securities at the fastest pace ever. Again, adding artificial demand, and real estate's taking off, rents are taking off. There's no end in sight here either. They're buying debt, they're issuing debt, they're buying assets, sending dollars around the world to central banks that are buying assets with the dollars. All of this is in an effort that is very successful to cause what we're seeing now, massive inflation. And then they have to create reasons to borrow cash. What better way to do that than a war, or more wars, or prolonging of wars, and another crisis, and this, that, and the. As a matter of fact, there's 3 major crises in play right now. Let's talk about that. What are they? Number 1, an energy crisis. Number 2, a food crisis. Number 3, okay, and this is getting attention here on the mainstream, but it shouldn't surprise you. This commodity surge that we've been seeing is being called a crisis as well. And what does that mean? More cash has to be thrown at not 1, not 2, but 3 crises. And the war, 4. I mean, we could go on with this, but each of these crises here, let's talk about energy crisis. Okay, we're hearing about shortages. Okay, food crisis, shortages, possibly not enough for everyone to go around. It's an incredible thing here, people. And shortages, what does that mean? Surging prices. Look, you know all this if you've been following this blog, and nothing should surprise you at all what you're seeing. You understand what you're seeing, why you're seeing it happen. And that just means for you and me that we're going to continue to do exactly what we are doing. Look, the easiest thing to take away from all this is we're going to see global debt surge faster than ever. I've been telling you lately that we are going to see global debt double in a very short period of time. And this is, again, leading us towards, a meltdown, an absolute meltdown in the debt market that people are not going to believe. A sell-off in the debt market, which is going to put a lot of pressure on the stock market, which is going to sell off. And this surge in commodities that you're seeing now is nothing as to what's coming down the pike, because you know how it's going to work. A sell-off in the debt market, cash is going to leave the debt market, cash is going to leave the stock market as rates spike in an uncontrolled fashion, And all this cash is just going to move. It's just going to move into commodities like I've been explaining for years. We're seeing it already. But the real key to the situation is what? Watching the debt market, the 10-year yield. And right now, the 10-year yield, people, I still say this. Again, another one of my calls that I've made recently. And not all my calls are right. Believe me, I know that. All right, I try my best to give you the information that I think you need to know about and at least try to help you stay ahead of it. And I'm not right all the time, but I'm trying. I think I'm right most of the time. And I think what we're going to see here, in fact, I'm certain of this. We're going to see the 10-year yield settle above 2%. Does that mean it's going to happen this week with the Fed raising rates? And it's going to happen. I would be, first of all, a couple of things will happen. If the Federal Reserve does not raise rates this week, number one, I will be wrong. Number two, the market's going to hate it. The market wants to see a rate hike here, believe me. It's been priced in for a long time. You remember what happened last time? I believe the Fed would raise rates, but they didn't. And the market took a hit. And it was a very short-lived hit. Also, as I explained would happen, it would rebound. It did. However, okay, this time I think will be different. If the Fed does not act, the market's going to be very disappointed. And the stock market could take a bigger hit. And I expect to see more volatility here. Again, uncertainty because of the war, which is going to expand in one way or the other. I also think we need to watch for a false flag event. Okay, we've already been warned and repeatedly of a potential chemical attack, a bio attack. We're hearing the red line from our brain dead president here that Russia's going to pay a severe price if, a chemical attack or a bio attack were launched. So look, they're setting the groundwork here. So all they need to do to literally set this thing off is, to fulfill one of these things. A chemical attack, a bio attack, an attack on a nation, a NATO nation. President Biden already said, President Retard Biden already said this would trigger World War III. And, so all the groundwork is set. All they got to do is cause it to happen. Let's see how that plays out too. I want you to be ready for anything, people. Look, you have known for many years, if you've been with me, to expect anything. Expect the unexpected, okay? They're going to do things that you won't believe moving forward here. They'll kill, maim, slaughter millions to keep the debt-based economic model going. The debt-based system is the greatest threat to humankind, and you're seeing the ramifications of it now. Wars, the propagation of wars, the spreading of disease, any reason imaginable to keep borrowing from the future will be instituted. That is the mechanism here. It's the debt-based economic model, period. And who knows really what else they have in store for us people. It's a terrible prospect to think about. And that's why I always say, and I've been saying for years, to love each other, to care about each other, to be charitable. We are our greatest resource, and we need each other so badly, you and me, and we got to get together with like-minded people here. We got to realize what they're doing to us. Again, look, we have no representation anymore. We have a one world government today run by central banks. The world is a stage, and they are moving the pieces around in any way they want to. Okay, they're the ones making the rules. They are the puppet masters of everything. It's an incredible situation. Everything else is just theater. It's just a way to keep the people in line, to make them believe in a system that no longer exists. But you know all this already, people. Anyway, so look, in summary here, big week. We got the FOMC meeting. We're going to get the decision on monetary policy Wednesday. We'll see what happens. I think, like I said, we're going to get a rate hike. And I also believe the market's going to respond in a positive way. Could I be wrong on both points? Absolutely. But let's see. I'm giving you my best take on this. With regard to uncertainty, expect it. Okay, that means more volatility in the market. Lots of things going on geopolitically. And that's going to rattle the market as well. But keep your eye on the 10-year yield. Look, all of this, All of this can be summed up by looking at pretty much one thing, and that is how the 10-year yield is performing. Right now, it's just under 2%. I think it's going to settle above 2%. The market's going to like it there. More debt is going to be borrowed into existence, people, than you could have ever imagined before. Forget about QE1, QE2, QE3. The Fed, other central banks are going to continue to inflate. Massively stock market positive. It's going to destroy the dollar and other currencies as well along with it. People are going to be made to suffer on a biblical scale moving forward, and they are already. And you knew this because I've used those exact words for years. So now you're seeing it. And anyway, people, look, what else can I tell you? I don't like the current situation globally. It's horrible to see. I have a hard time sleeping at night, really thinking about how people are suffering, what's going on, and what they're about to see moving forward. I don't think people have seen anything yet with regard to the amount of bloodshed, pain, suffering, anguish that they're going to be forced to deal with in this new paradigm that I have explained to you, this new set of rules that I have said was going to come from years. I've used those exact words for years, and I think I nailed it. I mean, things are getting really, really bad, and I think they're going to get a lot worse here. And the grand finale, and you know this already, the grand finale is going to be the largest transfer of wealth the world has ever seen. Yes, wealth is already being moved up the food chain. It always is. Okay, all the talk of, wealth inequality and blah, blah. When you hear a politician, Joe Biden, retard, or anybody else trying to push that narrative to you, realize what they're really saying. They will continue to call on the central banks to push wealth right up to the 1% and 2%ers. That's really what they're saying, okay? And I think you already know that. And when we get the implosion in the debt market, which is eventually going to happen, the transfer of wealth it's going to be a moment in history. It's going to be very rapid too, and extremely rapid. Okay, when the debt market does sell off and rates start to spike in an uncontrolled fashion, it's going to happen. We're going to get a market meltdown unlike anything we've ever seen. I sincerely believe an 80% sell-off in the S&P 500 is a possibility. 80%. What does that mean for you? I also believe that commodities are going to skyrocket like you have no idea. You're going to see gold and silver go absolutely ballistic, and you're going to see, in my view too, cryptocurrencies take off. I think it's going to take people by surprise. I really do. At how this is going to play out and how fast it's going to happen at one point, but it's not going to happen yet. And we have tools, you and I. Number one, we're going to be watching the 10-year yield. Number two, the MMRI, Mannarino Market Risk Indicator. It's in the yellow right now, but there's no red flags here. There's nothing going on. Keep your eyes on these things, and of course, follow this blog. I'll keep you on top of it, as I always try my best to do. All right, look, long video. I covered a lot of stuff with you. Let's see how this week plays out, and moving forward, I think we know what to look for. More engineered crisis. Another one, and more suffering, more human suffering on an incredible scale. All right, I'm out of here. See you in the morning. Love you. Please share the video.